With electric vehicles being the next big thing in the automotive industry, there is no doubt that companies that focus on building one will be the center of attention for automobile enthusiasts and investors alike. This is very evident from the performance of EV-related stocks since 2020, and one such company that is preparing to change the EV industry is the Workhorse Group. Hey guys, welcome back to another video. Today, we will be taking a closer look into the Workhorse Group and what they got with them, and also a quick analysis of their whole stock situation. But before that, make sure to subscribe to our channel if you are new here. So without any further ado, let's dive right into the video, shall we? As you know, electric vehicles are the future. With zero emissions, electric vehicles are superior to internal combustion engines, and not just in terms of emissions, but also in the power output too. Not only that, EVs are much more straightforward in their design. That makes them inherently more reliable. It is always good news for all of us when we come to know about a new contender in the EV space. More competition means better products and better prices for us consumers. Tesla right now is leading the EV industry with its products and charging network. An EV startup that is looking to change the way we look at trucks would be Workhorse Group. Workhorse is aiming to make a lot of electric delivery vans and trucks. Its stock had risen nearly sevenfold in 2020. We can say that many investors are convinced that electric vehicles are the next big thing, and the transition from the internal combustion engine is long overdue. Now we know some of you might not know about the Workhorse Group. Workhorse Group is a company that specializes in the design, development, manufacture, and sale of electric medium-duty trucks and unmanned aerial delivery systems that are integrated with electric vehicles. Not just that, they also develop cloud-based, real-time telematic performance monitoring systems. The firm operates in two divisions, both as an automotive company and an aviation company. The automotive division serves as an original equipment manufacturer of Class 3-6 commercial grade medium truck chassis marketed under the Workhorse brand. The aviation division offers delivery drones and SureFly multicopter. The company sells its vehicles to fleet customers directly and through its primary distributor, Ryder System Inc. The company was founded in 2007 and is based in Loveland, Ohio. Workhorse got its start back in 1998, doing something very different than EVs. The company was founded to take over the production of GM's popular P30 and P32 step van chassis. You know the kind of vehicles these are. Basically, these are food trucks and delivery vans and that sort of thing. Useful, ubiquitous, and often just part of modern life. And then they later went on to make the W15 pickup truck. Workhorse also maintains a well-positioned drone delivery business. It's another avenue with potential solid promise as last-mile delivery continues to grow. Their product line includes C-Series electric delivery truck and package delivery aircraft, Horsefly. The Workhorse C-Series electric delivery truck platform is available in multi-sized configurations, including 450, 650, and 1,000 cubic feet. Oh, and Workhorse Fly is an unmanned aerial system, which is a custom-designed, purpose-built system that delivers packages. Investors in Workhorse Group previously drove the stock price to an all-time high based on high hopes that the company would win at least a portion of a $6 billion USPS contract to replace its fleet with next-generation delivery vehicles from Workhorse. Later, when the U.S. Postal Service announced that a 10-year contract would go to a subsidiary of Oshkosh, shares of Workhorse Group immediately reduced to 50%. However, what is surprising to us is that Oshkosh did not even include an electric vehicle in the original bid. Workhorse Group was the only all-electric delivery vehicle maker left as a finalist for the contract. The reason why the company lost the deal is not clear yet. Workhorse planned to produce only 1,800 vehicles in 2021. It could be because of this limited capacity of production that cost the company its contract with USPS. Considering the Biden administration plans to electrify the entire federal fleet of vehicles, Workhorse was the only EV company bidding for the USPS business. Still, Oshkosh will be offering battery electric versions of its gas-powered vans as well. Losing the USPS contract is just one thing, but losing it to Oshkosh is another thing entirely. Why we say this is because Oshkosh's proposal for a next-gen truck for USPS wasn't even electric. It's based on an internal combustion engine, but a highly fuel-efficient one. In other words, at a time when the world is shifting to electric vehicles, USPS picked a non-electric van over Workhorse's van. Workhorse officials said it had requested additional information from the USPS regarding its decision. Workhorse intends to explore all avenues that are available to non-awarded finalists in a government bidding process, the company said in a news release. Oshkosh's current market cap is about $7.25 billion. What's more, Oshkosh is a larger entity with manufacturing facilities already in place. It will likely have an easier time turning sales to the USPS into profits. There are so many advantages that would have made Workhorse a better pick, in our opinion. EVs have zero emissions, and they are far better for the environment. They are much more reliable and offer low maintenance costs. The battery technology is continuously improving, making EVs more accessible too. There are no fueling costs too because, well, you guessed it, they don't use fuel and run entirely on electric power. There were rumors in 2020 that Workhorse had little to no chances of landing the USPS contract due to the mechanical failures in prototypes that were too crucial to ignore. Renewable energy is not the primary source of energy in the US, and if anything happens to the grid, the entire postal services will come to a halt without any backup plan. It will be much easier for an internal combustion engine powered vehicle or hybrid vehicle to continue the service even during a time like that. It is not all bad for Workhorse, however. Workhorse still owns 10% of Lordstown Motors, which is a spinoff that former Workhorse CEO Stephen Burns now runs. Workhorse's $80 million cash pile also provides some ammunition to turn the firm around. Not just that, there are several ways Workhorse can make a comeback. Firstly, the company can lean on its fast-growing industry. President Joe Biden has committed the US federal government itself to electrify its entire fleet, so Workhorse could yet win a much different contract. Secondly, Workhorse has a high degree of operating leverage, which is a byproduct of its shallow sales figures. That means even a small improvement in sales could send shares of this $1.7 billion minnow skyrocketing. Workhorse Group is now valued at less than $2 billion. That being said, it has orders from other companies too, and they are unrelated to the USPS fleet. That doesn't mean you should buy Workhorse stocks right now. We are very optimistic about the whole EV trend that is going on right now, but with Workhorse stocks, we don't have the same opinion. Losing the USPS contract changes everything for Workhorse. This means that either USPS absolutely does not care about electrifying their fleet, or maybe Workhorse's underlying EV technology is just not ready as of now. After all, this isn't the first time that a big logistics player has walked away from working with Workhorse. A few years back, UPS and Workhorse were collaborating. Then, that collaboration stopped, and UPS is now all in with Workhorse's main rival, UK-based EV maker Arrival. If Workhorse had won the USPS contract, that would have validated the company's technology, cementing it as a leader in this space, and paved the path for multiple contract wins in the coming years. Workhorse still burns over $50 million in cash per year, giving it only a limited window to turn around. And given Workhorse's history of missing sales figures, it's unlikely that the company can recover quickly. While we were not modeling success in the USPS, we had high hopes that Workhorse would play a role, especially given the current Biden administration's stance around government fleets being zero emission. While Workhorse has had a spotty history of execution in the past, the company is on a much more of a solid financial footing. Management has been executing on the third generation of its delivery. However, for us, the trend here is pretty straightforward. Logistics companies do not believe that Workhorse's technology is good enough to deploy at scale, or at the very least, they think competitors offer superior solutions. Of course, that is not looking good for Workhorse stock. Workhorse had a bright future, but will that be the same again? Only time will tell. Workhorse's achievements point to a broader investment picture, that the inevitable shakeout of the electric vehicle market has begun. Big winners like Tesla, NIO, and Lucid Motors will provide investors with lasting gains, while weaker ones will disappear. But as weaker players fold, you don't have to worry about their losses or missing out on potential turnarounds. In growth market investing, shakeouts are just another step on the long road to success. Amid all these uncertainties, it's best to do what USPS and UPS have done. That is to walk away from Workhorse stock. If you own Workhorse stocks, you need to let things settle down, even if it means there will be a bounce back up in Workhorse stock. With that, we have come to the end of our video. Did we miss out on something? Do let us know in the comment section below. Also, don't forget to subscribe to the channel for more content just like this one. Also, don't forget to click the bell icon to get notified about our new videos. And please, give the video a thumbs up if you liked it. It motivates us to make more content just like this. Catch y'all in the next one.